So we were discussing about the fifth problem. Premier Steel Limited has present sales of 40 lakh, unit price 20 rupees. So 40 lakh divided by 20, 2 lakh units presently. The variable cost 12 rupees, fixed cost 5 lakh, directly fixed cost is given. The present credit period of 1 month is proposed to be extended to either 2 months or 3 months, whichever will be more profitable. So two proposed policies are there of 2 months and 3 months. Presently we have 1 month. Following information is given. 1 month credit period, 2 months and 3 months. Increase in sales. If we make it 2 months, the sales will increase by 10%. If we make it 3 months, the sales will increase by 30%. The percentage of bad debts at present is 1%. A policy may 2%, B policy 5%. Fixed cost will increase by 75,000 when sales increase by 30%. Normally fixed cost will remain same. But in this problem, it is specifically given that when sales increase by 30%, fixed cost will also increase by 75,000. So presently fixed cost 5 lakh rupees given. 5 lakh रुपये फिक्स्ड कॉस्ट है, तो प्रेजेंट पॉलिसी में 5 लाख लेंगे, ए पॉलिसी में भी 5 लाख ही लेंगे क्योंकि 10% इंक्रीज हो रहा, बी पॉलिसी में 30% इंक्रीज हो रहा, तो 75,000 रुपीज भी इंक्रीज, 5,75,000 फिक्स्ड कॉस्ट. The company requires a return of 20%. Evaluate the profitability of the proposal and recommend the best credit period for the company. First of all, in working note, number of units, total sales by selling price per unit. Presently, total sales are 40 lakh given. Each unit selling price 20. The number of units you get 2 lakh. In A policy, there is 10% increase in sales. जितने भी units अब बेच रहे हैं उसमें 10% बढ़ जाएगा. तो 2 लाख यूनिट्स में 10% ऐड कर दिए तो 2,20,000 यूनिट्स. बी पॉलिसी में 30% इज द इंक्रीज इन सेल्स, तो 2 लाख प्लस 30% 2,60,000 यूनिट्स. ये वर्किंग नोट कैलकुलेट कर लिए. नाउ इवैल्यूएशन ऑफ प्रपोज्ड क्रेडिट पॉलिसीज. तो प्रेजेंट पॉलिसी देन प्रपोज्ड पॉलिसी. दिस प्रपोज्ड पॉलिसीज आर ए एंड बी, राइट. नाउ क्रेडिट पीरियड. क्रेडिट पीरियड इज गिवन इन मंथ्स, नॉट इन डेज. It is given in months. Presently it is 1 month. Proposed policy 2 month and 3 month. 2 month and 3 month. Now number of units. Presently number of units are 2 lakh. Proposed policy A, it is 2,20,000. B policy it is 2,60,000. That's it. Now selling price per unit is given in the problem 20 rupees. 20 rupees is the selling price. So 20 into 2 lakh is 40 lakh. 20 into 2 lakh 20,000 is 40 lakh, 44 lakh. It is 44 lakh. Similarly, 20 into 26 lakh is 54 lakhs. 20 rupees into 2,60,000, you will get 54 lakh. Now variable cost per unit is given in the problem. It is 12 rupees. Variable cost per unit is given in the problem 12 rupees. Multiply 12 into 2 lakh is 24 lakh, I think. Yes, 24 lakh. Then 12 into 2 lakh 20,000, you will get 26 lakh 40,000. Similarly, 12 into 2 lakh 60,000, you will get 31 lakh 20,000. The fixed cost, presently fixed cost 5 lakh. A policy also 5 lakh, B policy 5,75,000. क्योंकि 30% सेल्स बढ़ा तो फिक्स्ड कॉस्ट को 75,000 बढ़ा दो. प्रॉब्लम में दिया है. अगर वो स्टिपुलेशन नहीं देता तो वी वुड हैव टेकन ऑल 5 लाख. नाउ टोटल कॉस्ट 24 प्लस 5 29 lakhs. 26 plus 5 31 lakh 40,000. So total cost is 29 lakh, 31 lakh 40,000 and lastly 36 lakh 95,000. These are the total costs. Now A minus B. A is sales, 40 lakh minus 29 lakh, it comes to 11 lakh. Profit is 11 lakh. Second one profit is 12 lakh 60,000. Last one profit is 15 lakh 5,000. This is total cost, sales minus total cost, profit. Now increase. 12 lakh 60,000 minus 11 lakh, it is 1 lakh 60,000. It is 4 lakh 5,000. 1 lakh 60,000, 4 lakh 5,000. Now bad debts at the rate of 1%, 2%, 5%. 1%, 2% and 5% of sales. यहाँ ऊपर sales है. ये sales के ऊपर 1% it comes to 40,000. Second is 88,000. And third one is 2 lakh 60,000. Now increase 88,000 minus 40,000, 48,000, 2 lakh 20,000. 48,000, 2 lakh 20,000. Now investment in receivables, the total cost is 29 lakhs into 1 month, 1 by 12. Secondly, it is 31 lakh 40,000 into 2 months, 2 by 12. Thirdly, 36 lakh 95,000 into 3 by 12. So first one it comes to 241,667. Second one it is 523, 333. Last one 923, 750. So these are the investment in receivables. Now additional funds invested in receivables. Minus कर देंगे 523, 333 minus 241. So it comes to 281, 661. 281, 666. Then 682, 083. Now, what is the return on additional funds investment in receivables? It is given as 20%. 20%. It is given as 20%. 56,333. And second one, 136, 417. That's all. We have made all the calculations. Now we'll make a trade-off between benefit and cost. So what is the increase in profit? 1 lakh 60,000 and 4 lakh 5,000. Now increase in bad debts 48,000. Then 2 lakh 20,000. Then return on additional funds 56,333. 1 lakh 36,417. So we have taken benefits and cost. The total is 1 lakh 4,333. 104,333 and 356 417. 356 417. 55,667 is the net gain. And secondly 48,583. That's it. So we have completed all the calculative part. The two proposed policies, 2 month and 3 month. Present policy 1 month. So increase in profit, benefit is 160, 405. Cost is this much. So net gain 55,667, 48,583. Now we have to give the suggestion. It is suggested to adopt the proposed policy A. Since in this case, the net gain is more 55,667. इसमें फायदा ज़्यादा है. So we suggest the company to increase the credit period to 2 months. To increase the credit period to 2 months. Since in this case the net gain is more. That's all. Now, see the sixth problem. Problem number 6. A company currently has an average annual turnover of rupees 10 lakh and an average collection period of 45 days. So 10 lakh rupee total sales, a 45 days collection period. The company wants to experiment with a liberal credit policy on the ground that increase in collection period will generate additional sales. From the following information, kindly indicate which of the policies you would like the company to adopt. Credit policy 1, 2, 3, 4. Wow. Presently the policy is given 45 days and we have 4 proposed policies. 1, 2, 3, 4. Totally 5 columns. We need 5 columns. Present column को छोड़कर, present policy को छोड़कर और 4 proposed policies हैं. तो first proposed policy, credit policy 1, increase in collection period by 15 days. So presently we are allowing 45 days. प्रेजेंटली 45 डेज है, तो 45 डेज में 15 दिन 15 डेज और ऐड कर देंगे, तो 45 प्लस 15 इट कम्स टू 60 डेज. तो फर्स्ट proposed policy credit period 60 days. An increase in sales by 50,000. Presently total sales are 10 lakh rupees. Now 50,000 rupees more, so 10 lakh 50,000 will be the total sales. Percentage of default, this is bad debts. Bad debts 2%. Second policy में increase in collection period 30 days. तो presently we have 45 days. वो 45 में 30 days और increase कर देंगे, तो 45 plus 30 75 days. तो 75 days per credit period के लिए 80,000 is the increase in sales. तो sales will become 10 lakh 80,000 and bad debts are 3%. Third policy increase in credit period is 40 days. तो 45 plus 40 85 days. And increase in sales 1 lakh. तो 10 lakh plus 1 lakh 11 lakh. Bad debts 4%. Fourth policy 60 days बढ़ा देना है, तो 45 plus 60 105 days. And increase in sales by 1 lakh 25 11 lakh 25,000 is the sales. 6% bad debts. Selling price of the product is 5 rupees per unit, 5 rupees. Average cost per unit at the current level 4 rupees and the variable cost 3 rupees. The current bad debt loss 1% and the required rate of return on investment is 20%. A year can be taken to comprise of 360 days. Lengthy problem. Because apart from present policy, we have to evaluate 4 proposed policies, and that too we need working notes first of all. First of all, we need the working notes. Number of units is equal to total sales divided by SP per unit. Present number of units. The total sales are rupees 10 lakhs divided by the selling price per unit is 5 rupees. The selling price per unit is 5 rupees. Total sales are 10 lakh. So 5 2s means 2 lakh. 2 lakh units. Then first policy is equal to, the sales will increase by 50,000. So it will become rupees 10 lakh 50,000 divided by rupees 5. Second policy, rupees 10 lakh 80,000 divided by rupees 5. Third policy, rupees 11 lakh divided by rupees 5. Then fourth policy, rupees 11 lakh 25,000 divided by rupees 5. Now see here, 50,000 increase हो गया, 80,000 increase हो गया, 1 lakh increase and 1 lakh 25,000 increase divided by 5. So it will become 2 lakh units, 2 lakh 10,000 units. Then next one is 2 lakh 16,000, 2 lakh 20,000 and lastly 2 lakh 25,000 units. Right? Now, working notes, average cost per unit. Average cost per unit is given in the problem as 4 rupees minus variable cost per unit 3 rupees. So 1 rupee is the fixed cost per unit. Present number of units is equal to 2 lakh. Present number of units 2 lakh. Therefore, total fixed cost is equal to 2 lakh into rupee 1. That is equal to rupees 2 lakhs. The total fixed cost is rupees 2 lakh. So we have completed the working note. Problem में number of units नहीं दिया, तो हम number of units का होना जरूरी है. Without that we cannot calculate variable cost total. तो number of units we have calculated. Fixed cost problem में नहीं दिया, तो average cost में से variable cost minus कर देंगे. Fixed cost per unit. Present number of units are 2 lakh. Present number of units are 2 lakh. So 2 lakh into 1 rupee, 2 lakh rupees. That's it. Now we have to evaluate the proposed credit policies. Now simply we'll fill up the points. Here it is given in days. The credit period is given in days. So presently how many days are allowed is 45 days. Proposed policy 1 में 15 days add कर देंगे. 45 plus 15 60 days. Second policy 30, 45 plus 30 75. 40 plus 45 85. Then 60 plus 45 105 days. These are the number of days. Number of units, just now we have calculated 2 lakh. 2,10,000, 2,16,000, 2,20,000, 2,25,000. Already we have calculated in working notes. Now selling price. The selling price is 5 rupees per unit. So it will be 5 into 2 lakh is 10 lakh. Then 10 lakh 50,000. 10 lakh 80,000. 11 lakh 25,000. That's it. Now variable cost per unit is given as 3 rupees. 6 lakh 30,000. 6 lakh 42,000. 6 lakh 60,000. 6 lakh 75,000. These are the variable cost. 660, 642, 648. 3 into 3 6 is 18, 648. Then 6 lakh 30,000, 6 lakh. Fixed cost is 2 lakh rupees. We have calculated in working note. The fixed cost will remain same. So it will become 8 lakh. 8 lakh 30,000. 8 lakh 48,000. 8 lakh 60,000. 8 lakh 75,000. Now profit 10 lakh minus 8 lakh 2 lakh. Profit is 2 lakh and 2 lakh 20,000. Then next one is 2 lakh 32,000. Next one 2 lakh 40,000. Last one 2 lakh 50,000. Now increase in profit 20,000, 32,000, 40,000, 50,000. Now bad debts. Bad debts are given as presently bad debts are 1%. 1%, 2346. 1% present policy. 2346 proposed policies. So 10,000. 1% of 10 lakh, 10,000. Then 21,000. This is 2% of 10 lakh 50,000. Then 32,400. Next one is 44,000. Last one is 67,500. Now subtract. It is 11,000. It is 22,400. It is 34,000. This is 57,500. These are the increase in bad debts. Now only investment in receivables. So what is the total cost? 8 lakh. 8 lakh into 45 divided by 360. It is given in the problem a year to consist of 360 days. Specifically given in the problem 360. That's why I am taking 360. Second one, it is 8 lakh 30,000 into 60 by 360. There is no space, but you have to continue the same way. So you are going to get 1 lakh. Secondly, you are getting 1 lakh 38, 333. Next one 176, 667. Next one 203, 056, then 255, 208. These are the investment in receivables. Now additional fund invested in receivables, subtract कर देंगे, तो it will become 38,333, 76,667, 1,03,056, 1,55,208. That's it. Additional funds invested in receivables. Now return at the rate of 20% given in the problem. So 20% of 38,333, 7667. Next one is 15,333. Next one is 2611. Last one is 31,042. That's it. So we have completed the calculative part. Now we want to make a trade-off between benefit and cost. Trade-off between benefit and cost. Increase in profit. Increase in bad debts. Return on additional funds invested in receivables. Now we can take the amounts. Increase in profit, it is 20,000, 32,000, 40,000, last one 50,000. Here increase in bad debts. Increase in bad debts are 11,000, 22,400, 34,000, last one 57,500. Now return on additional funds 7,667, then 15,333, 20,611, last one is 31,042. Now we'll add up. 18,667. Next is 37,733. Then 54,611. Last one is 88,542. 88,542. Now subtract. We'll get net gain. नेट गेन और लॉस, पॉजिटिव आया तो गेन, नेगेटिव आया तो लॉस. तो 1333 इज पॉजिटिव, 20,000 minus 18,667, 1,333. Second is 5733 loss minus, then 14,611 minus loss. Last one is 38,542 loss. So in this problem we are having a net gain only in the first policy. whereas there is a net loss in second, third, fourth policy. The remaining three policies we are having a loss. First policy we are having a gain. So we suggest the company to adopt credit policy 1 since there is a gain. That's it. So we have completed problem number 6. Now 7th problem, you see, I am giving this 7th problem as your homework for your practice. A firm is contemplating an increase in credit period from 30 to 60 days. The average collection period at present is 45 days. So we are not concerned with 30 to 60. The average collection period at present is 45 days. So we are concerned only with 45 days. Is expected to increase to 75 days. Only one proposed policy. Present policy 45 days, proposed policy 75 days. It is also likely to increase the bad debts to increase from 1% to 3% of sales. Present bad debts 1%, proposed policy 3%. Total credit sales expected to increase from the level of 30,000 to 34,000. Number of units are given. The present average cost per unit 8 rupees and the variable cost per unit is 6 rupees and 10 rupees per unit respectively. So average cost 8 rupees है, variable cost 6 rupees है. So 8 minus 6, 2 rupees is the fixed cost. Multiply 2 rupees with 30,000. 30,000 into 2, 60,000 rupees is the total fixed cost in working note. Selling price 10 rupees per unit. Firm, assume the firm expects a rate of return of 15%. Should the firm extend the credit period? This problem is exactly similar to problem number 4. Just now we have completed 4th problem. The same problem, only figures are different. Figures are changed. So by seeing this 4th problem, you do the 7th problem. Now 8th problem you see. Super sports company dealing in sports goods has an annual sales of rupees 50 lakh and is currently extending 30 days credit to the dealers. Total sales 50 lakh. Present credit period 30 days. It is felt that sales can pick up considerably if the dealers are willing to carry increased stock, but the dealers have difficulty in financing their inventory. Super sports company is therefore considering shifting in credit policy. The following information is available. The average collection period now is 30 days. Present collection period 30 days. Variable costs are 80% of sales. We don't require units. Previous every problem variable cost was given per unit. This is the first problem where variable cost is given as a percentage on sales. So जो भी sales है उसका 80% variable cost. Fixed cost 6 lakh directly given, same. Required return on investment 20%. Credit policy A, B, C, D. Just like the previous problem. Present policy, then 4 proposed policy A, B, C, D. Average collection period directly given 45, 60, 75. Directly we should take. Annual sales directly given. Determine which policy should the company adopt. That's it. So it's very simple. It's very simple now. Come on, directly we'll take problem number 8. Evaluation of proposed credit policies. Same 4 columns we require. A, B, C, D. These are the 4 credit policies.